Hi, everyone. This is Tim Melvin of the Community Bank Stock Investor and Banking on Profits, coming to you from a nice summer day down here in Central Florida. Going to be our usual gorgeous mid 90s muggy, chance of afternoon thunderstorm. That's pretty much every day from now until sometime in October. That's not a complaint. I actually vastly prefer warmer weather, hotter weather to cooler or colder weather. I'm just not a big fan of the cold stuff anymore, so I actually enjoy the nice hot weather that we've got going on down here. And of course, after being in the Texas Hill Country, it seems almost like a chill down to walk out, and it's only in the 90s. So, speaking of the Texas Hill Country, um, while we were up there, well, we played a lot of board games, particularly in the evenings. And as the week went on, we taught the kids how to play poker. Now, I know, they don't teach kids to gamble, blah, 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 whatever. The kids loved it. And I happen to think that poker, along with chess, is one of the great games for learning how to think. So, and of course, giving me a chance to take all the little kids' money just absolutely made it all that much better. But seriously, the kids fell in love with the game. They were playing 7 card stud. And I played the first game, and then I set out most of it because the way the kids play it is, take the deal. They bet a chip, everybody calls. They bet a chip, everybody calls. They bet a chip, everybody calls. So basically, what they were doing was they were betting 5 chips on a complete and total random outcome. And some of those that won really felt like they were great poker players, even though what they were doing had nothing to do with any actual poker skill. Now, it occurred to me that that's a lot like some of the valuation indexes. You know how they spit it up, the Russell growth, the Russell value, and growth is outperforming value, and that's been going on for years. So we should just focus on growth, and the value investors are all dead. Yeah, no, see, that's an incomplete game. It's like, betting 5 chips on random flips of the card with absolutely no strategy or kind of thought put into it. You're just betting on the top half of the Russell in growth characteristics and the bottom half of the Russell 2000 universe based on price to book value, which is just dumb. Okay, that doesn't make any sense at all. Now, value is dead. Everybody's lagging. I hear it all the time, except not really. Let's look at some of the top investors in the country right now. All the bank stock activists and bank stock specialists are killing it over the last 5 years, earning in that 15 to 20% range that turns you into a long-term superstar. We've been replicating that success very closely with both Banking on Profits, the focus banks, and of course the bonus picks are just crushing it, slaughtering the market by a very wide margin. That's definitely value investing. We're buying undervalued, underperforming banks at very low multiples of book value. We're insisting on a margin of safety and that they have plenty of capital and a sound loan portfolio. That is value investing, absolutely at its finest, the very definition of value investing. That is absolutely crushing the index and the growth indexes and many of the leading growth funds. So to say all value is dead, nah, not really. Now take a look at Colbert, Kravis, and Roberts, their public equity portfolio. We'll just leave the private equity out of it because that's crushing as well. But just on the public equities that they own over the last 5 years, they've earned 2.5 times the market's rate of return. The private equity guys, very value conscious, pay a lot of attention to the price that they pay for the business because they understand that really in this game you make your money when you buy, and the sell's just when you're provided with an exit opportunity. Yeah, all the money is really made and determined by how much you pay for the underlying business. Again, classic value investing techniques. Got a few more of these. A firm called Value Holdings Capital. They're crushing it, about 2 times the market rate of return over the last 5 years. The Undiscovered Value Fund. It's run using the theories of Richard Thaler, who just won the Nobel Prize in Economics for his theory. Also crushing the market using a deep value-based approach to the markets. And Leucadia has been absolutely crushing it. Earning again substantial advantage over the market with a very condensed portfolio, very concentrated, but you put together using value techniques. So we can't say value investing is deeply underperforming. What we can say is stocks in the lower half of the Russell 2000 based on price to book value. That, my friends, is in fact underperforming the market. Um, Now, I'm going to go out of order here just a little bit. Um, when we take that undervalued universe, and I did some quick screens, and these were quick. Okay, I didn't spend a lot of time on this, but I like small caps, so we're going to reduce the world down to small caps. I like smaller companies. I think I can gain an advantage there over the big boys that I can't get anywhere, with the larger stocks. So, ran a quick screen. 3,107 unit U.S. stocks of all varieties, trading with under $1 billion of market cap. Okay, so now let's begin to willow that down. If I just take those that have the top three F scores, I go boom. There's only 527 companies left. If I then take those that have the top three F scores and excellent credit, oh, I'm down to 247 companies. My universe is shrinking rapidly, okay? This is like folding a hand in poker. There's just a lot of this stuff I don't want to play with. So now, how many of those 247 are bargain priced based on the EBIT multiple? 26 of them right now out of that initial 3,107. Financials based on price to book value, we get down to just 44 financial stocks, small cap financial stocks that we'd be willing to consider right now. And there's 31 REITs that have less than $1 billion market cap and are cheap based on valuation. So these are going to tend to outperform. We've thrown out most of the stocks in the Russell 2000 or 3000. We're just not even interested in them. We don't care how they do. They don't pass our filters. So by concentrating on these, we still have an excellent opportunity to beat the market over time because we're not using that valuation-based or market capitalization-based indexing approach to investing. That makes absolutely zero sense to me because your definition of value is shifting as markets go up and down. Right now, you've got a much higher price to book value that would make that list than might have been true, say, in early 2009. So it's arbitrary, and basically what you're doing is you're betting a single chip on every flip of the card on every single possible random outcome. It's like, we call it half poker, I guess. And then, when we got home, I sat down with my 15-year-old stepdaughter, and I tried to teach her some of the ins and outs of poker and how to bet and how to fold and all that great stuff. And we had fun, and we think she's getting the hang of it. We're very hopeful that she'll pay her college tuition at the poker table under stepdad's guidance. But, well, I'll let you know how that works out. The one thing that, and we ran into, she played a hand, and she asked my advice, and she played it perfectly. And guess what? She lost the hand. And she was rather upset because she didn't think she played it right. I said, no. You played it absolutely right. But you have to understand, just because you played the hand right doesn't mean you're going to win every time. There's going to be losing streaks, but the probability is on your side. So if you have 100 of those, you'll probably win 90 of them, but be aware that you're going to lose 10. That's just, nothing is guaranteed in life, and that does transfer very well into stocks. Not every stock we pick is going to win. And more importantly, we're not going to outperform each and every year of our investing career. I don't care if you're a value investor, a short-term trader, or a growth investor. You're going to have good years and you're going to have bad years. And when you break that down into value and growth practitioners, I've got friends on both sides of the aisle, and they will tell you sometimes the growth guys do a lot better. Sometimes the values guys do a lot better. Losing streaks are part of the business. We're defining losing here as underperforming the relative index, not a whole string of losing years put together. That will, in fact, put you out of business. But Warren Buffett gave a speech years ago. He called it the Super Investors of Graham and Doddsville. And he took the track records of people like Tweety Brown, himself, Rick Guerin, Charlie Munger, Walter Schloss, and noted that they all had their roots in that classroom at Columbia University taught by Ben Graham using value techniques. All of them had just smashed the market returns by a 2-to-1 or greater margin, in some cases 3-to-1, over long periods of time, 10, 15, 20 years. All of them also had extended periods of several years where they underperformed the S&P 500. They had positive returns, but they didn't do as well as the index. Now, When they beat it, they crushed it. But some years they underperformed it, and you have to understand that that's part of the game. And if you go trying to switch styles, I'm going to be a growth investor because that's popular. Oh no, wait, value's doing better. I'm going to go over here and be a value investor because now that's doing better. You're not going to make any money. Okay, you're probably going to lose money, and then you're going to do really silly stuff like I'm going to be an options trader to make up for what I've. That's a bad path. Okay, that's a golf at the municipal country club once a month. Lunch special at Luby's cafeteria every other month if you're lucky and have been really saving your nickels and dimes. So you need to pick a style that fits your personality, your objectives, and the amount of time that you're willing or able to commit to the investing process. Personally, I prefer the value approach. It works very well with my personality, my lifestyle, and the returns have been outstanding over the course of my career. Now, just because I like value investing doesn't mean that Louis Navellier has to give back his Palm Beach house or his magnificent ranch out in Nevada. Growth, the way he practices it, suits his personality and his lifestyle perfectly, and as a result, he's had extraordinary success with his methodologies. So you need to pick a method, you need to stay with it, and you need to play the hand based on the rules each and every time. You need to play the hand properly. Most of the time you win, sometimes you lose, and it's just part of the game. And then remember something, and this has been the hardest thing to teach my stepdaughter so far. The key to being a great poker player is to fold a lot. Okay? There's a lot of hands you just shouldn't play. And just as we took the universe from 3,107 potential small capitalization stocks, and we whittled it down pretty quickly to about 121 total opportunities worth further investigation. Out of all those, an even smaller handful would actually make it into the portfolio right now. So you can't play every hand. And there are times where you need to be out of the market. If you're a valuation sensitive investor, as I am, you will find that there are times when you're selling stocks or they're getting taken over. Has been the case in Banking on Profits and the Focus Bank stocks and the Community Bank Stock Investor. And there's not really anything to replace it with. So you're kind of forced marking timing angle to that. And there's times to just sit around and hold cash and wait for valuations to come back to you, just as in an average night of poker, maybe you only play 10 to 15% of the hands that you see, and that's probably on a pretty good night. So anyway, lots of lessons from the poker table this week. We've had a lot of fun with the poker thing. We're going to have a lot more. She does enjoy playing. She got her boyfriend hooked on playing, so hopefully we'll get a lot of nice evening card games going while the Orioles play on TV, hopefully. Anyway, hey, don't forget, guys, we've got the Community Bank Stock Investor on sale, $49 for the first year. So please tell all your friends and neighbors, get them involved in this. There's still some stocks to buy. We've just put 3 bonus picks in the Banking on Profits newsletter on Friday, and we should have some more focused stocks as markets provide us opportunity in the weeks and months ahead. The new issue, by the way, went out Friday. Hope you guys enjoyed it. I thought there was some pretty good stuff in there. Anyway, Verdad Capital. I've been following these guys, and that's Dan Rasmussen and the bunch of guys, really smart guys that he's hired. And they're doing private equity replication strategies, which is kind of a very cool core value investing strategy. And they did a piece today, and we've talked about this kind of stuff a little bit before, but from current valuation levels, expected returns are really quite low. In fact, the 10-year return is anywhere from a little bit negative. In his report, he put it at 0% annually compounded to 17% has been the highest ever, but the bell curve is stacked much closer to that 0%. So the long-term returns from general equities based on starting valuation, they don't look all that attractive right now. So he suggested there's really only 2 ways to do this. One is to go small. That's what we do at Banking on Profits and Community Bank Stock Investor. We really narrow our universe down to pretty much the smallest of bank stocks. They're not very liquid. There are no forced sellers. So if we get kind of a panic break in the market, we're going to tend to do a little bit better, maybe and sometimes even a lot better than the broad market, because most of the owners of these small banks are not going to be interested in selling or having to meet institutional liquidations or that type of thing. So they're stronger hand stocks, as I like to call them. Be a lot more buying in that sector, I think, as prices came down than runaway rampant selling. So The other was to go international and to buy the cheapest markets in the world and to rebalance that portfolio once every year or so based on cheapness. Sounds like a great idea, but I want you to consider where you'd be investing today if you decide to go that route. I'm not currently doing this in any of my portfolios. I did back in 2009 have one account that was run using this approach because it was originally developed by a guy named Meb Faber, who I think is a very smart guy, and he's done some great work in this same area. But today, it would be Russia, Italy, Poland, which is having a huge nationalist kind of rise in their political situation. It's creating all sorts of turmoil over there. And then Japan, which of course has a serious aging problem. But those are the four markets where you would be splitting your money up. So based international investing based on buying the cheapest market, it does work, but you have to have a strong stomach because you're going to be investing in some pretty scary places. So I'll stick with the small because I'm pretty good at it and I'm comfortable with it. If you are interested in that type of approach, as I mentioned, Meb Faber has done some great work on it, written a couple books on it. They're available on his website. He was one of the guys that, interesting story, he actually took all his books off of Amazon because he would go in and he'd look, and his book might be listed for $9.99. There'd be guys selling it for $29.99, and it would be selling at that higher price, and he couldn't figure it out. And he sat down, he made some calls, he talked to some people, did some investigation, and found out there's actually a money laundering scheme using Amazon where these guys would list books for sale at higher than publishers list, sell it to themselves basically, and that washed the money through and it came out clean and taxable on the other side and hid their criminal activity. Meb wasn't a real fan of his name being used at, and it also had the potential to generate some tax problems for him because in some cases it looked like he himself was the seller. So he took his books off Amazon and they're on his website, which is mebfaber.com. So check those out if you're interested in the international cheap stock approach. I'll stick with the small cap banks and I'll help you out with that. So, and especially tell your friends and neighbors, $49 first year community bank stock investor. That's a pretty good deal, folks. Okay, Father's Day, got a nice gift from the Baltimore Orioles. They actually won a baseball game 10-4, broke a 9-game losing streak. Just not a good baseball team, guys. It's when the pitching works, nobody hits. Well, nobody's hitting no matter what. Until yesterday, nobody was really doing a great job at the plate, with the exception of Manny Machado and Adam Jones. So, not a good team, but we do have one of the most important series of the week starting this week, and that, of course, is against the Seattle Mariners. Now, look, the Orioles aren't going to the playoffs. There's no hope there whatsoever. We've already lost 50 games. It's not even the All-Star break yet. But I do have that bet with my friend that runs a value fund out in Seattle every year, rabid Mariners fan. So we do bet game by game and on season totals. So I need the Orioles to kind of buckle down, focus, and make this a good baseball year in at least this aspect of the game by go ahead and sweeping this series with the Mariners this week. That would be very well appreciated. Hottest story in baseball, Houston Astros, the team I picked to go to the World Series from the American League. Yesterday they won their 11th straight, and with that pitching staff, they look absolutely unstoppable. Seattle's doing enough to keep in the mix, and for right now, they're just a game or so back. So I'm really hoping, again, the Orioles come in, do a great job, and help bury the Mariners so that my predictions do, in fact, come to pass this September. On the book series, new book out in the Jack Ryan series. I have to say, I was skeptical when they decided to keep the characters going after Tom Clancy died. But you know what? They've done a really good job, and the latest is a solid addition to the series, so I can highly recommend it. New Paul Levine book out. Now, if you've never read Paul Levine, the Jake Lassiter series, and then the series featuring Solomon and Lord, all set here in Florida, all legal kind of legal action thrillers. These are great books. If you've never read them, go back, start at the beginning. I think they're all available on Kindle now. Both series are great, fun, fantastic reads. Now, in the last book, he combined his Lassiter character with Solomon and Lord and ran them both together in the novel, and it was good. Picks it up right where he left off in this book, and a good, fascinating, interesting, fun read. So I can also highly recommend that one. And I just started this one last night because I finished those other two. I'm really excited about this. There's a new book out in the Harry Dresden series by Jim Butcher. Now, if you like Harry Potter, This is Harry Potter for grown-ups. Dresden is the only wizard listed in the Chicago phone book. And he's had some great adventures involving all sorts of imaginary creatures. But it's a lot more grown up than the Harry Potter books, but the same sense of fun and adventure is there. And I'll tell you right now, I'm a huge Harry Potter fan. Everybody in this house is. I used to pay extra to have the books delivered the day they came out. So the next morning I would get up and there would be the new Harry Potter book already on my doorstep, and the weekend was shot because I would stay home and finish the book, and then my daughter would come by and immediately steal it from me. But anyway, those are real fun books, a whole bunch of books in the series. When you're looking at it, be very careful because over the last few years, a lot of the entries that have come out have been graphic novels. I don't really read those. So the last new one probably came out 4 or 5 years ago. Got a new collection of short stories by Mr. Butcher using the Harry Dresden character. I'm pretty excited to read them. It's like catching up with an old friend. So anyway, that's all I've got for you today. Yeah, markets look ridiculously pricey to me too. We're not finding a lot to buy, but as I said, we just put 3 bonus picks out of very, very small little banks that we found and decided we liked the whole bunch. So we put those out as bonus picks for Banking on Profit subscribers. And, we're picking at the corners. We see some stocks we want to put into the focus portfolio, a couple that are close to qualifying for entry into the much stricter Banking on Profit core portfolio. We'll keep looking, we'll keep digging, and hopefully we'll keep earning the type of high returns that we've seen since we started this project back in 2013. Anyway, guys, have a fantastic week. I'll talk to you guys next week unless there's some big major market event where I need to shoot a video during the week. That almost never happens, so odds are, see you next Monday.